Welcome to Markets Now. I'm Michelle Rook with Rich Nelson of Allendale. Livestock futures lower on Tuesday. We were mixed over in the grain trade, but let's start off talking about soybeans. Rich, some new lows for the move, some 3-year lows. Is this all about weather? Is that why the funds have hit the accelerator here?
I do think that weather is the largest contributor for us right now in the short term. Keep in mind the trade is now wondering with these coming rains for the east, will there be some type of offset now to the mixed performance of these crops in the western corn belt? So that's a question we're looking at right now. Also keep in mind here, unique for soybeans as well. We do have demand considerations, well-known concerns about both old crop export sales as well as a very poor new crop booking as well. So I think soybeans might have a little different story than the corn and wheat side here.
And so let's talk about that. Where do you find support here on the charts for beans? Are we getting close?
That's a good question here. From a chart perspective, we're in a downtrend, we're making new lows, and we're doing so with confidence, with closes near the lows. So at this point in time, we don't have a good chart number to pick out and say, here's good support. What we will say for soybeans is economic value based on our stock estimates of 465 million bushels. That implies 1060 to 1080. So on a slightly positive note, we are nearing economic value if you assume trend yields.
Yeah, so the trade anyways believes that the East is going to make up for some of the downfall on yield in the West then.
That sure is right. And that's a really big question for us. And we've got questions not just about acres and what will be harvested. Obviously, the yield issues for much of that west is still a bit scattered. And we certainly still have this dryness, at least in place for a few more days here for portions of that far western area. So at this point in time, that's the question for us. Is the East going to offset the mixed performance on the west side here this year?
So the corn market did try to bounce early on Tuesday and then kind of got pulled down by soybeans into the close. But what's your thoughts about that market, especially with the funds so short? Are we about done going down there?
And same type of question or same type of point, I think we'll bring into the conversation with corn. If you look at this from a number standpoint, a 2.3 billion bushel stock number, that implies $4 even for December corn. So we're actually very, very close to there. Also unique to corn, different than soybeans, is we still have a strong export market to speak of as well. So I think there's a little different story. Maybe we can argue corn finding a little cushion at these lightly lower prices still ahead maybe for the soybean side here.
Yeah. Is the trade believing in the corn maybe just like soybeans that were at trend line yield or not?
I do think so. Certainly for the soybean side, you can argue a ratings model, which is not very accurate at this time of year. That would imply very slightly above trend yields. For the corn story, where ratings models actually are lightly more accurate than the soybeans at this time of year, that actually would imply we're just slightly below trend yield. So I think the message certainly going into Friday's USDA report and in the trade's mind is so far it's too early to say we're up or down from trend yields right now.
And the funds in the corn, are they record short, do you think, at this point?
They've got to be. As of last Tuesday, almost 337,000 contracts net short. We've dropped 10, 12 cents from Tuesday's close. So it's very likely we are now at new record fund low positions on the corn side. We're probably getting close to those prior lows for soybeans.
Yeah, no doubt. And obviously, the funds don't necessarily have a reason to buy without some sort of a weather threat. But how much farther do you think they want to push the short side of these markets?
And that's some real question here for us. And we personally don't pay attention as strongly to the fund buying or selling numbers. Our focus is on the market's reaction to them. Is the market accepting this fund selling? And we do have to admit that certainly over this past week, it certainly has. So maybe in the next week or two, if we near some of those economic value targets for corn and soybeans, maybe we'll see further fund selling attempts not accepted by the market. And that's the thing we've got to watch very closely. Market reaction itself here.
Yeah. And when you talk about December corn ridge, $4 obviously psychological support, but a lot of times the funds just blow past some of those things and overdo it, don't they?
They sure can. And one thing, of course, right now is we're still in this large unknown period as far as crop yield determination. These weeks ahead still can give us a lot of ups and downs. So it's very possible, yes, this market could overdo it with a move below $4 even. So that's very possible here for us to look at in the short term. We'll certainly have to see whether this weather forecast in the days up ahead confirms that or denies that.
Gotcha. What about the winter wheat market? A little bit of a gain there. At least we weren't going down on Tuesday. But, is the market, I guess, thinking that we're going to have bigger yields and bigger production when we get into the report on Friday?
I think so. And I think it's very well accepted here. Our numbers imply 45 million bushel increases over last month's production estimate for total wheat. And I think that's very well known. These anecdotal yield numbers we're hearing are just quite strong. What I will say positive for the wheat side, and this is different than soybeans, for instance, is we are going to have an increase in production noted on Friday's report. However, there's going to be an offset with this export issue. Export sales are running 12% over the 5 year average. USDA's prior goal was a 6% decrease. So we may see a 25 million bushel increase for exports. We may see a 50 million bushel increase for exports. So the wheat story could be interesting on Friday.
Yeah. We also have to compensate for the bigger quarterly stocks that we got at the end of June, the bigger corn acreage. How will USDA reconcile all that, Rich?
And for the corn side, they did find larger stocks of old crop still around, and that will result in some type of change in the category of miscellaneous demand, feed residual. So on the balance sheet for Friday, we are going to have a drop for feed residual for old crop. We are also going to see some of that offset, perhaps, with a change in exports. So that will be something which does have to be addressed on this report. So really for the corn side, lightly on the wheat side as well.
Gotcha. And the cattle market, well, we gave up early gains for the second day in a row, actually, maybe the third day in a row, but we've had record cash trade. Do you think that the market is topping? Is this topping action?
A great question. So let's lay out this story. Wholesale beef has been on a 45-day rally where we've added almost $38 per hundredweight to wholesale beef prices. We've gone far beyond even what the most bullish hope could have been. So the question right now is today's morning number, a $4.87 drop, is that now a change in the story? Are we seeing this market start to top? That's a good question. And let's be very clear. This market has rallied quite a bit more than I expected to at this time of year. The real bull story doesn't really start until 2025 for this resumption of the long-term bull story. So at least in the short term, maybe we do have a top. I'm not quite sure here just yet.
Yeah. From a technical standpoint, though, we do have a gap to fill in the August live cattle, though, right?
That is right. And let's lay out this chart picture clearly. We had that rally to new highs on Friday. It was rejected by the day's close. Last couple of days have been kind of mixed ugly trade, and now we're facing this gap on the chart, 179.67 to 180.35. So there is reason on a chart perspective to perhaps have a little lower trade in the days ahead.
Yeah. And your thoughts about hogs? The lean hog index continues to go down, and so it's pretty hard for the futures to bottom, then, isn't it?
And that sure is right. So we have this very well-known seasonal for cash hogs and cash pork. We have the lows in the winter, and the highs of prices are at basically the second week of July. This year we had an early peak for wholesale pork in April, and an early peak for cash hogs in May. Right now we're down almost $4 from that peak on cash hogs, $7 to $9 for wholesale pork. So it looks like this time we still have some troubling concerns about this lagging cash market situation for pork.
Okay. So do you think the contract lows are going to stop us, or will the funds just keep pushing it?
Actually think of the summer prices. The summer contracts are fairly priced right here. They're assuming that we're not going to make too much movement in the very short term. This is still a seasonal low in offered pork supply, so we're probably not going to see too much break in terms of this short-term issue right now. One question for us about the October and December contracts: are these markets now, which already have good discounts, are they a little too low? That might be the question on any further breaks as we go into this month of August here.
Okay. Good point. All right. Thanks, Rich. Rich Nelson with Allendale, and that is Markets Now.